All right, what's up, guys? Good morning. Happy Wednesday. All right, what's up, Mirza? What's up, Andrew? Good morning, Lorna. And yeah, happy Thanksgiving, guys. But all right, we'll jump in. Quick look at the futures. Everything's a little quiet. Um, well, not everything. We got gold up 1.2. We got Bitcoin up about 3 and change, and the rut up about 0.8. But looking at the NQ here, I told you back on Monday, I think the biggest and probably the most important setup in the market, the weekly squeeze here for the NQ. And we're getting the first green dot, which means at the moment they're trying to fire that squeeze. When they did it back here in, when was that? That was back in pretty much the same time of year, right back in 2023. When they fired that weekly squeeze, it kicks off a pretty nice push to the upside. Little pullback, little consolidation. They again fire the squeeze, kicks off another nice push, pullback, little consolidation, and another weekly squeeze. If they can keep it moving and take out the highs, yeah, I think we're getting 22 to 23,000 here. So that's bigger picture, and then shorter term, meaning today, Friday, maybe into next week. I think you want to watch the 4-hour squeeze here. And hey, guys, give me 15 seconds, and I'll be right back with you. All right, guys, sorry about that. I've got a little sinus infection, so I had to go huff some Flonase in the corner. But yeah, bigger picture, weekly squeeze to the NQ. They finally try to fire that to the upside. What could give them a little more oomph here would be the 4-hour. Momentum above zero. We got the buy signal. We got the perfect score of 15. The only tricky thing about this week is we're closed tomorrow, and then we got a half day on Friday. Maybe not this week, but if anything, into next week. If they can hold the NQ above, we'll call it 20,900, then I think the odds favor they take that squeeze, try to get a push going. The thing we want to keep in mind is, yeah, bigger picture, they just fired a weekly squeeze. So that all by itself kind of sets a tone for a big push. If you can then begin to fire the 1-hour squeezes, fire 4-hour squeezes, I think we even have a 2-day squeeze. The more the merrier. But I think we got a 2-day squeeze. Come on, Toss. Yeah. We're 1 bar in, but good-looking 2-day squeeze. So there's the NQ, and then if we take a look at the rankings here, I think it remains a bull's market to lose. We got the S&Ps with a perfect score of 75. Dow Jones gets a 73. The QQQ gets a 67. And then on the big boys here, a little good, a little bad. Apple with a 73. Amazon with a 65. You could look at a Netflix. You could look at a Microsoft, a Tesla, a Meta. Broadcom, NVIDIA, and TSM. They've got a lot of work to do. And then with the SMH, with the SMH down here at the bottom of the sector rankings, we'll go look at a few of them. But compare the NQ, compare Apple, um, for example, to something like an AMD. We go through a few of these semiconductors, they all leave a lot to be desired. So here's AMD in a brand new daily squeeze under the falling 21 with a sell signal and a negative 15. If anything, that makes for a great short. If we check out the king of the hill, NVIDIA. Now, I don't want to go short NVIDIA. But in the short term, yeah, this is it's a little sloppy. Below the 21, above the 50. We look at our lower time frames, everything's neutral. In the short term, until things clean up, it's not going to help the market move forward. Broadcom, under the 50, under the 21, 2150 cross. Again, in the short term, not very bullish. Compared to an Apple, with a daily squeeze, a buy signal, much better structure. So if we're taking the rankings here, and I'm looking for a long, I'm not going to be in a big rush on the semiconductors. I'm not looking at silver, gold, biotech, healthcare. Where am I really trying to look? Could be communications, could be XLK, financials, industrials. Some Meta, some Tesla, Microsoft, Netflix, Amazon, Apple. Plenty to work with. So for a few of these, finally getting a little traction on the Apple trade this week. We got the 240 calls for January. We bought them for about 350-ish, and they're going for about, I'm going to round up a bit, we'll call it $5. So definitely some good progress. For this swing trade, the whole focus here is this weekly chart. Big leg to the upside. And then from, May, June, July, September, October, November, you go through that consolidation phase. The key throughout that whole phase is everything remains pretty bullish. You're not getting a bunch of weekly closes below the 21. You're not pulling back to a 50. You're not breaking structure. It's bullish into the weekly squeeze. We've had that for a few weeks. The major thing that's been missing here on Apple is really good alignment. Meaning, yeah, Apple's got this really, really good-looking weekly chart, but then you go look at the daily time frame, the 4-hour, the hourly. For a couple of weeks there, they weren't the best. The progress Apple makes this week is, right, yeah, now you can take that weekly squeeze, but then you take it down a few notches to the daily time frame. And now the daily chart has good alignment for a push higher. Momentum cross, brand new squeeze, buy signal. Much better than a few weeks ago under the 21 with bearish momentum. So that all looks much better. We also have a 2-day squeeze. We also have the 3-day squeeze. And if we check out the spot gamma levels, we got our call wall at 235 and the put wall. Put wall at 225. So for the shortened week, that'll be the key spot, 235. Being that we have calls all the way out in January, if we can get the breakout this week, awesome. We don't need it this week. My thinking is they ever take out the highs to 237, 238-ish. Take out the highs, fire the daily squeeze, fire the 2-day squeeze, fire the 3-day squeeze, eventually fire the weekly squeeze. Pretty quickly, I think Apple's into 245, 250. So that one we are long for now, and then the other one would be Starbucks, which I would like to buy more of. That'll be up to Starbucks from here. The key for this trade is, can they hold it above $100? Let me pull up the options chain. So we have the December 20th 100 strike calls. It's a really clean daily squeeze, and I think a lot to like here. Momentum crosses bearish back in September, and now for the first time in a few months, it finally crosses positive. Not always, but usually means now the bulls have got a lot more to work with. Combine that momentum shift with a big daily squeeze, can make for a pretty good push. But like I was saying, the key here is they can't let it back under $100. Back under 100, it doesn't mean that Starbucks falls apart. Doesn't mean it can't turn around and break out the following day. But obviously, 1, 2, 3, 4, 5, 6, 10 or 12 times here, they try to get through the 100 strike. Can't quite do it. And now on the push, they finally get it through. So I don't mind the dip. And if anything, I think the dip is pretty normal. Back under 100. And really back under the daily 21 around 99. I would opt to close the trade. If they can hold it above 100, I would like to jump in here and buy a few more. So we got some Apple, we got some Starbucks, and then we also have a debit spread in Meta, which we bought all the way back up here around 600. I'm not banking on the trade working, but to be fair here, if they can get it back above 575 to 580, I think they can try to put a Band-Aid over it. Then they can stabilize it. Then they can try to rebuild. Into December, January, there might be a chance they still try to take that daily squeeze, get the breakout through the $600 call wall, then move it into that 615, 620 target. Again, for the current trade, I'm not going to bank on it. I've kind of written it off as a max loss, but if I'm wrong, that'll be a great thing. Excuse me. But all right, so we are long Apple, we are long Meta, we got some Starbucks, and then according to the rankings here, we want to avoid TSM, we want to avoid Nvidia, Broadcom, Google. Let's go check out some Amazon. Amazon spends, I think it was 23 or 24 weeks in a big weekly squeeze. Finally fires, they finally break it out. Pretty quick back test. Break above 200, push it into 215, and then pretty quickly back down to 200. I think for now it all holds up pretty good here. Little break below the 21. They pop it back above. Yeah, I think for the most part, Amazon holds up pretty good. So now the key would be, can I find a good spot to buy it? That could be a pullback into 205, 200. That could be the next 15-minute, 30-minute hourly squeeze. At the moment, nothing really shaping up, but one I would definitely keep an eye on. And then Netflix. So Apple, Amazon, Netflix, and then Microsoft and Tesla. I wonder if in the short term here, Netflix is maybe a little cooked. Not meaning, hey, here comes a massive pullback for Netflix, but maybe the thing just takes a breather for a bit. Based on the weekly, that wouldn't be the craziest thing. Beautiful weekly squeeze, push off the 21. That's a bit of an overachiever. it takes you to and through the 3 ATR target. Gives you a little bit more than you would expect from a really good squeeze. Right into the $900 call wall. I believe the call wall. Let's see, Netflix. Yeah, call wall at 900 and a put wall at 865. So the call wall and the put wall, right? Think of those like magnets, but also like brick walls. Really good example is, I might have showed you this on Monday, but part of my 2025 trading goals is I want to find more moments in time like this. Right, not my typical weekly squeeze, not my typical daily squeeze. It's a much shorter lived moment in time. All right, 15-minute squeeze, 30-minute hourly. But this was back on Friday. The trade lasted about 5.5 minutes. I bought the 900 call for about $1 and I sold it for about 2 and change. Now they went from $1 to about 4 or 5. But point being, a lot of different things made that moment in time a really good trade. One of them being the 30-minute squeeze. 30-minute squeeze, white arrow. All right, cool. I'm checking off all the boxes. Buy signal, perfect score, everything I'm looking for. What also made it a good trade was it had really, really good alignment. The weekly chart had a buy signal, the daily, the weekly, the daily, the 4 hour, the 15. Really good 30-minute squeeze, really good alignment. More importantly, or equally as important, pretty much all of last week, Netflix is number 1 on the board. By a pretty good margin. So it's the strongest thing I've got. With my go-to signal on the 30-minute squeeze, with really, really good alignment, meaning everything lined up for a push higher. And then the real kicker was I'm getting that signal around 880. At that point, we're $20 below that key 900 level. Big round number, big psychological level, and the call wall. All that lines up $15, $20 away. It can make for a really nice trade. I say that to say, looking at Netflix at the moment, we don't really have that dynamic. We don't have that beautiful 30-minute squeeze. We don't have nothing but buy signals. It grades out well, but it's not number 1. And now we're about $30 away from the call wall. Where back there, I think you're more so, within striking distance. So part of my 2025 goals is I want to find more moments in time like that. But for now, we don't have that in Netflix. Could I get that in an Amazon? Amazon trades 208-ish. We got a call wall at 210. Yeah, a couple of dollars below that call wall. Can I get that 5-minute, 15-minute, 30-minute, maybe even an hourly squeeze? If I get that set up and I've got good alignment and Amazon's top 2, 3, 4 on the board, jump in, play for a push to that target. Right now, we got nada. And then we'll wrap it up here with Microsoft and the Tesla. Microsoft. Not really an immediate idea. But one I think you keep it in your back pocket. This weekly squeeze we got here. We also have a 3-day, 2-day, and a daily squeeze. But looking at the life and times here for Microsoft, back in October of 2022, we pulled back and we finally put in the bottom at the weekly 200. From there, we mess around for a bit. Brand new weekly squeeze fires to the upside. All right, now the bulls are 1 for 1. A little pullback, a little break in the action, consolidation phase. We get the white arrow. Again, the squeeze fires. Right now, the bulls are 2 for 2. Little break in the action, consolidation phase. We finally get the white arrow. Again, the squeeze fires. You're taking those squeezes, playing a really clear uptrend. Higher high, higher low, higher high, higher low, higher high, over and over again. Since we bottom, the bulls are 1, 2, 3. They're 3 for 3. Now we find out eventually if they can go 4 for 4. They've got to get momentum shifting. They've got to get the stacked EMAs. A lot of things they got to do here. But to our benefit, we're finding it really, really early. 2, 3, 4, 5, maybe even 6 months down the road. If the squeeze fire is long, Microsoft should be a $500 stock. 4 or 5, 6 months down the road, the squeeze breaks short. Microsoft should be a $370, $360 stock. Maybe a little early to call for either or, but to our benefit, we're finding it early. Now we keep an eye on it. Next week it gets a 4-hour buy signal. Okay, cool. Bulls are making a little more progress. Then they go getting a daily buy signal. They keep on chipping away at it. Then it can all look a lot more like Apple. Day after day, week after week, everything's improving. Everything's getting a little bit more bullish. Sets you up eventually for the breakout and the bigger move. But never mind Microsoft itself. Just more so as a proxy for the market. We have a lot of things like this that are setting up. Bigger time frames in uptrends, doing nothing but building up energy and squeezes. If they begin the fire, we're going to get a lot more upside. Right? Microsoft is one example. Apple, of course, is another example. One could argue Amazon is still coming out of that giant weekly squeeze. So that party's just kind of getting going. There's the XLK. Think of this: the XLK just gets a momentum cross. Never mind firing a squeeze. Never mind breaking out. We're just finally getting momentum turning up. Meaning they got so much room to keep on taking it higher if they want to. Like I told you, maybe a little caution here on the semis in the short term. But look at the SMH. When that weekly squeeze fires, if it fires long, I think that's moving into 300. That might be 1, 2, 3, 4, 5, 6 months down the road. When and if it does happen, then think of your NVIDIAs, your AMDs, your Broadcoms, etc. They're going to get a crap load of wind at their back. So a lot of things are brewing on the bigger time frames. But shorter term, 4-hour squeeze on the NQ. If we are going to get a push here into Thanksgiving, into Friday, should come from that 4-hour squeeze. I think it would be, totally acceptable if we just more so chop for a couple of days. It can make for a quieter week, and then into next week, we go and get the bigger move. But all right, y'all, any questions, anything you want to look at, drop it in the chat for me. And I have got you covered. Let me see. Futures, S&Ps are flat. Yeah, so the NQ has a 4-hour, a 2-hour, a 1-hour, a 30-minute, and a 5-minute squeeze. Fixing to do something. All right, good morning, Zen Trader. PayPal. All right, what do we got on the PayPal? Daily chart's really bullish. Above the 21 EMA, a buy signal, and the perfect score of 15. I gotta like that. Now the question would be, where do I look to buy it? It's bullish. It grades out nicely. What's missing for me right now is a setup. And that's almost always going to be a squeeze. We do have a 5-minute. We shall check out the 5. 5 minutes, a little rough around the edges. My entire trading game plan really boils down to one thing. In a bull market, I'm looking for strong stocks, and I want to buy them in squeezes above their 21 EMA. Boil it all down. That's pretty much what I do. So PayPal's above the 21. Now I got to figure out, are we bullish? Well, I've got a buy signal and the perfect score. All right, so we're above the 21. We're bullish. From there, I'm going to go look for a squeeze. It could be the weekly chart for a bigger term swing trade. It could be a 5-minute for a day trade. But I can work that game plan on a PayPal while I can't work that right now on an AMD. On AMD, I would actually work the opposite game plan. We are below the falling 21. We got a negative 15, so we're very bearish. Anywhere under that 21 EMA, I want to short it in a squeeze. So yeah, I like PayPal. Not too much in the form of a lot of squeeze action right now, but I like it. With all that being said, the real sweet spot is usually somewhere back there. I don't know if you guys and gals can see my Keltner channels. Let me spruce them up a bit here. And not to say that buying PayPal up here is a bad entry, but in my book, nothing sweeter than, really regardless of what time frame I'm buying it on, buying it right near that daily 21. That is that sweet stuff. But yeah, I like it. I like it. Palantir is up next. So Palantir would be another one. Are we bullish? Are we bearish? Or are we neutral? All I got to do is glance up here at the scoring system, and we got a 15 out of 15. Yeah, we're bullish. Are we above the 21? We are. But now here's the thing. We're closer to the 3 ATR target. The green line up there, we're closer to the green line than we are to home base down there at the 21. Not a big problem, not a deal breaker. But as a trader, what I got to consider here is, the easy part of the move is usually the move from that 21 EMA into that 3 ATR extension. Anything beyond that usually is just a cherry on top. So what does that really mean? It just means I'm buying it up here a little bit differently. Then I would buy it back here near that 21. If I can catch this 4-hour, hourly, 30-minute, 15-minute squeeze, $1, maybe $2 above the 21, I can be a lot more aggressive in my strike selection. I can be more aggressive in time till expiration. More importantly, I can be a lot more aggressive in my sizing. Reason being, I buy it at 58. It takes out the daily 21. I'm going to dump the trade. I'm maybe taking on $1, maybe $2 of risk in exchange for a $10 push into the target. If I'm buying it up here, I want to take maybe half my typical size, maybe structure the trade a little differently, just in case I buy it and wake up tomorrow, and then here comes the pullback down to $58. What you could also do is anchor to a lower time frame. For example, take this 1 hour squeeze and then manage your risk based on the hourly 21. All right, I'm not going to buy it up here at 66 and sit through a $10 pullback to the daily 21, but I can buy it at 66 and then I can dump it on a break below the hourly 21. Go trade the hourly squeeze the same exact way I would trade a daily squeeze. Wait for a trigger, buy it above that 21, play for a push into 3 ATR, and if they take it under the mean, cut the trade, move on. So it's a matter of how much room are you willing to give it. But I like the 4 hour, I like the hourly. Pretty good stuff there on the Palantir. Tango Whiskey. My thoughts on the IWM breaking out into newer highs going forward. The weekly chart would support that idea. And you know, as we know, that doesn't mean that it happens in a straight line from here. But they enter a weekly squeeze back in April. And they try to fire it a few times, but for the most part, you know, April, May, June, July, August, September, October, November. That's a big ass weekly squeeze. The fact it hasn't fired yet points towards, bigger picture. If they do fire it, that can kick off much more upside. The short-term target would be 250-ish, but again, bigger picture. You spend that much time in that long of a consolidation, building up that much energy. When you finally break out, not in a straight line, of course, but bigger picture can kick off some nice trend. So yeah, the weekly looks like it wants more. And then, daily chart's got a buy signal, a score of 15. Here's the thing, though. It could go from 240 to 250. It could also go from 240 back to 230. And the reality is, back down to 230, nothing changes about that weekly squeeze. Matter of fact, if you like it at 240, you should love it at 230. So yeah, that's what I'm seeing there on the Russell, the almighty Russell. And then Andrew and Scoop are saying some news on the Starbucks. Some Starbucks news. 101-ish. Hey, we'll take a news pop. We'll take a news pop. A pro trader, we can look at the crude oil, crude oil futures. Let me put an alarm on my phone here, guys. I gotta keep an eye on the clock. Let me see, timer, 5 minutes. Crude oil is a bit of a mess here. A lot of that being driven by the weekly. You're under the 200, you're under the 50, under the 21. Now they got a fresh weekly squeeze going. Momentum below zero. But to go along with that weekly squeeze, look at all the other time frames. 3-day chart has a squeeze. The 2-day time frame, the daily, the 2 hour, the hourly, the 30, the 15. So translation is a lot of energy being built up. When they all begin to fire one after the other, that can kick off the next big move. The weekly chart says it's probably going to be a move lower. Now if we drop down and check out the 3-day. Three-day squeeze says any day we'll find out. There we go. That'd be the ideal short. If they can't get it back above that 71, 72, the odds favor the squeeze break short. So to avoid all of that, they got to put a Band-Aid over it in the short term. Then the question becomes, okay, how likely is that? The level that would give you the over-under level, 71 to 72. In the event they're pushing back through 72 and they're canceling sell signals, they're rebuilding some structure, then they can put in the bottom, turn the corner. But I would argue under 72, there's more things working against it. The weekly squeeze on a sell signal, the 3-day squeeze on a sell signal. And now on the daily chart, we're getting the slingshot, which basically means on the orange arrow, everything's gearing up for a move lower except momentum. From here, if momentum shifts back below zero, they'll probably take that and break it short. So the Bulls need 71 to 72 to put a bandage over it.